Alright everyone, welcome to the channel. If you're new to the channel, warm welcome. In today's video, I'm going to be talking about Bitcoin Elliott Wave theory. I'm going to be teaching you some basic Elliott Wave theory. I'm going to be talking about what we've seen so far in Bitcoin's prior bull runs based on Elliott Wave theory. We're going to be talking about what we can expect next based on previous trends, and we're going to be wrapping things up talking about how have these previous trends panned out, and if they are still playing out as they previously did, where can we expect Bitcoin to bottom? Let's jump right into today's video. So let's start off with what is Elliott Wave theory. So if we paste in the Elliott Wave theory cheat sheet, a lot of you may not know this, but you can simply copy and paste images over into TradingView. So a little bit of alpha for you there. Now, Elliott Wave theory is the theory that markets move in waves. They move in three impulse waves, and within those impulse waves, they have correctory phases. So you can see waves 1, 3, and 5 are odd numbers, and these are all bullish impulses. Between these bullish impulses, we have what are known as correctory waves, and within these correctory waves, we come down. If I remove this, you can see from wave 1 down to wave 2, this is our correctory wave. From wave 3 down to wave 4, we have our correctory wave. So within the first 5 wave, we have 2 and 4. So the even numbers, once again, the even numbers are the correctory phases, and the odd numbers like 1, 3, and 5 are the impulses. Now, what happens after you have your fifth impulse? Now, if you are in a bullish trend, or even if you're in a bearish trend, you have either an ABC correction to the upside or the downside. Specifically for Bitcoin, Bitcoin has been on a macro bull run basically since its inception. Since 2011, it was incepted before that, but this is the chart that we are running over on Bitstamp to look at basically the first 3 bull runs so far that Bitcoin has had into existence. What happens is, as you can see, just like it is theorized over on the Elliott Wave theory, we have, a massive impulse up to wave 1, correctory phase, wave 2, impulse up to wave 3, correctory phase, wave 4, and then impulse up to wave 5, and then as you can see here, we have an A, B, C correction. Once again, A, B, C correction, and then you find your bottom and you can go on another rally to the upside. This can work both ways, so bear in mind if you are new to Elliott Wave theory, we're specifically going to be looking at how Elliott Wave theory works to the upside. Now, in Elliott Wave theory, within these larger impulses, so for example, you can see these big waves on the 1, 3, and 5, you have micro waves between them. So for example, on your 1 impulse, your 3 impulse, and your 5 impulse, as these are bullish waves, you have a 5 wave up into them. So you can see a 1, 2, 3, 4, 5 wave coming up into the 1 wave, and then coming down into the 2 wave, you have an A, B, C correction. You rinse and repeat, coming up into the second bullish impulse wave, also known as the third wave. You have your 1, 2, 3, 4, 5 coming down into your correctory phase once again, which the second correctory phase is the 4 wave. You have your A, B, C correction into the correctory phase, and then coming up into your last macro bullish impulse, which is the 5 wave, you have your 1, 2, 3, 4, 5 coming up to the top of the completing the market structure for the bullish impulse part of the Elliott Wave theory. Now, what happens when you come up to 5 when you are in a bullish wave? Well, you come down and have a macro A, B, C correction, and within these macro ABC corrections you have one impulsive wave back up to the upside, but this is mainly focused on coming down, having your correctory wave A, having a dead cat bounce basically up to B, and then having your correctory phase down to C, which typically always lands between the 3 wave and the 1 wave, and we're going to be talking about how that has panned out in previous cycles for Elliott Wave theory. Now, we should know what Elliott Wave theory is, so I'm now going to remove this. I want to show you just a small example of some Elliott Wave theory that we've had in this market cycle before we do move on. So for example, you can see this is where the macro market structure started over on BTC. So you can see in this bull run, you had your 1 wave coming into 2019, you had your 3 3 wave coming up into April 2021, and the 5 wave was very, very underwhelming in this market cycle. Very, very underwhelming compared to every other market cycle we've had as well. We came up to the 5 wave. Up here, as you can see, we've got these 3 impulses. And what happens when you have these 3 impulses to the upside? Well, like we said, you have your 1, 2, 3, 4, 5 waves, and then you come down to your correctory phases, which are waves 2 and 4. So once we come down to wave 2, you can see we have a big A, B, C correction. Coming up into wave 3, you've got your 1, 2, 3, 4, 5. Coming down to your correctory wave 4, you have your A, B, C coming down into this, and then your final 5 wave 1, 2, 3, 4, 5. The 5 wave, it's kind of hard to see with this one and the last one, but we were just slightly above the impulse of the 3 wave over here. And then this gets to the structure that we're witnessing at this moment in time, because as I'm sure all of you are aware, unless you've been sleeping underneath a rock, then I'm sure you're very aware that Bitcoin has been in a massive cascade for the past year or so. And within that, as we've completed this 5 wave, in my opinion, obviously, one thing I should probably state about Elliott wave theory is there is a high level of ambiguity to this, meaning that it is very subjective. Like, if you put 2 people in a room with a chart and you tell them draw Elliott wave theory, you're bound to have some slight differences. So for example, you might use Elliott wave theory and you might have drawn this slightly different than me. I know that some people drew a big ABC, and then something like an ABC over here. I've stick to traditional Elliott wave theory. However, you can still have ABC waves into corrections on the macro ABC. So for example, if we do clear this chart up for a minute, let me make sure I can get that back. Yes, I can. So I know a lot of people on this wave have got your A, B, C. Obviously, in my opinion, and I imagine in most people's opinions, we have not finished the C wave yet. We'll talk about that in a second. But within these minor moves, what I have drawn, I believe we had the 1, 2, 3, 4, 5. I know that some people have drawn this as A, B, and C, and I completely understand why. Because we've been landsliding pretty fast, and from here to here, it really wasn't too much of an impulse. And then from down here to here, I mean, this is where it starts making sense a lot more. But I believe it's specifically within this region where we didn't have too much of a bounce, which is why I see people drawing this like an ABC. And then to the upside as well, they've also drawn it like an ABC. And then to the downside over here, another big ABC. I completely understand why. Like I said, there is a high level of ambiguity when you are drawing these Elliott waves. With that being said, I specifically want to talk about finishing off with the micro moves that we're having at this moment in time, because I think we're gearing up for that last move to the downside. As we previously talked about, within this bullish market structure, you had your one impulse. No, apologies. This was a micro impulse. This was your one impulse. After you had the bottom in 2018, you had your 2, 3 impulse, correctory wave, 5 impulse. So these were your 5 impulses, and as we previously stated, when you do have your 5 impulses, when you're done with your 5 impulses, it is time to have that macro A, B, C correction. And you can see what I really want to focus on is the correctory waves. So sure, you know, you have the ABC correction up to the B wave, but more specifically, you have your 1, 2, 3, 4, 5 down to your first correctory wave, ABC, and then another 1, 2, 3, 4, 5 coming down to the C wave. And in my opinion, the C wave, I believe, at least according to Elliott wave theory, this, you know, bear in mind, my specific price target, if you look at my other Bitcoin videos, my target at this moment in time is the 200-week moving average. If you want to learn about, you know, why I think the 200-week moving average is where we should be targeting, you can go check out my other Bitcoin TA videos. I don't want to amalgamate the two videos together. I want to focus on Elliott wave theory here. Nonetheless, let's look at our most recent correctory waves. So you have, from the 5 wave, you've got your A, B, C, and within these correctory moves to the downside. Remember, when you're moving to the downside in ABC, it's no longer a micro ABC. This is what happens when you have these correctory waves within a bullish impulse, but we're having a macro ABC pulling us to the downside. So within that, we have a 1 wave, 2 wave, 3 wave, 4 wave, and 5 wave. And then once again, you can see A, B, C, and then coming down 1, 2, 3, 4, and I believe 5, at least according to Elliott wave theory, is going to be coming at around 20,000 or so. Now, I think it's very, very clear, specifically, you know, we can switch over to the daily, but I actually think it's very, very clear even on the weekly time frame. You know, you can see this big move down, and then you can clearly see that from this low down here at 39,000, this move up to 43,000 was definitely somewhat of a significant impulse. And then I obviously don't need to tell you, this free wave, this giant free wave, is a very, very clear free wave all the way back down to 25,300. We then have our correctory impulse back to the upside, which leads us up to 32,500. And in my opinion, we have already seen that last correctory wave to the upside, and now we should be looking at our bearish impulse to the downside. So bear in mind, you know, when you're having this ABC correction, your A is your bearish impulse to the downside, your C is your bearish impulse to the downside as well. But when you're in, you know, when you're in the 1, 2, 3, 4, 5 to the upside, you know, this would be your bullish impulse, this would be your bullish impulse, this would be your bullish impulse, and then you flip it on its head when you are having that ABC correction. You do come down to those lower prices. So let's now move over to basically the final segment of the video. I want to look at how Elliott wave theory has previously panned out in other trends. You now know my opinion. I believe that we are going to be coming down somewhere around about these ranges, at least according to Elliott wave theory. Now, when you do look at how Elliott wave theory pans out, once again, I'm not going to do a super deep dive talking about Fibonacci's on Elliott waves and all of those other stuffs. If you do want me to do a even deeper advanced guide into Elliott wave theory, do let me know. I will definitely consider it if that is what other people are you know, wanting to hear. But as in my opinion, before I made this video, I didn't think that that would be the general consensus, that people would want to watch an even longer video with more advanced talk on fibs on impulses and fibs on correctory waves and all of that stuff. So if you do want an advanced Elliott wave theory video, let me know. Apart from that, I won't mention it again if no one mentions it. But as you can see, most of the time we are generalizing that between the 1 and the 3 wave is normally the place where you do bottom on Elliott wave theory. So once again, you have your 1 bullish impulse, you have your 3 bullish impulse, and you have your 5 bullish impulse. And when you have your ABC correction, you typically come back between the 3 wave and the 5 wave. But at this moment in time, the 3 wave was up here. This was your 3 wave over here on Bitcoin, right at the top. So once again, 1, 2, 3, 4, 5. This was your 3 wave up here. So hypothetically speaking, we should bottom between the 1 wave and the 3 wave. Where is the bottom of the 1 wave? Well, the 1 wave actually over here is coming in at approximately 14,000, which is absolutely brutal. Now, in my opinion, I don't think we're going to be going all the way down to the 1 wave. I think for a plethora of reasons. I think the moving averages say it would be completely outlandish. I think, you know, although market sentiment is pretty crazy at this moment in time, and I don't want to, you know, dive too deep off the scale of the Elliott wave theory, but just, you know, without explaining, I do not think that we would be coming as low as 14,000. Could be wrong. This is just my subjective opinion. However, we are going to bottom within this range. And I know this is very unspecific, specifically because from where we are now, this is a big range between 27,000 and 14,000. But let's look at previous trends and see if we can notice anything about our C correctory waves. Now, let's take it all the way back to the start to when we had our bull run topping out in 2013. I love how people call this the 2013 bull run. I don't know why we don't, put more specific dates on this, because this really started in 2011. Nonetheless, where did we bottom? We had our 1 impulse, 2 correctory wave, 3 impulse, 4 correctory wave, 5 wave. That was the end of the market structure back in, I hate to say it, 2013 bull run. Nonetheless, we had our A, B, C correctory wave. And if I draw this back, you can see we bottomed at approximately $150. Bear in mind, I am, looking at this on the weekly time frame, so I'm probably going to fat finger the prices a tiny bit. So, if the bottom's actually at $145 or if it's $155, bear in mind we are looking at these general macro moves. We're not trying to say, specifically we bottomed at $149.96.24. We're just going to generalize. So $150 is the approximate value that we did bottom at. And what do you notice? The free wave was up here. Let's mark this a different color. Mark this red. So your free wave of this bull cycle was up here, free wave, and then your one wave was all the way down here. So when we did have this C correction, we came absolutely nowhere near we came nowhere near the one wave, and I do not want to do something like measure the distance between them, because the market cap of Bitcoin was exceptionally low back here. So I do believe there's going to be diminished returns. It is factual that there have been diminished returns playing out market cycle over market cycle. If you do also want me to do a video explaining the diminished returns theory, let me know. I'm always interested in branching out and providing more educational resources for the community. Nonetheless, if you have any ideas, and just a tiny tidbit from this, I do have a full educational playlist. I believe there's about 18 videos in there right now. There's a ton of things, everything from how to use Fibonacci's, how to use moving average, how to calculate death crosses, how to use Fibonacci candles, and I do plan on expanding this out, and I'm probably going to make a separate video about how to use Elliott wave theory within there. So definitely check out that. If you do have any more suggestions for that list, then let me know. But what do you know? Once again, C wave bottomed just below the free wave. Let's come back to the last market structure. We had our C wave at the approximate value of 3,100. Let's mark this green. And what do you notice? We actually bottomed exactly, basically exactly on the free wave. Let's look, because I believe we had a wick up to here. So we bottomed, this was the top of the free wave, and we bottomed right here. So what you'll actually notice is we bottomed above the free wave, which was very, very impressive in my opinion. Like I said, traditionally in Elliott wave theory, you normally bottom between the free wave and the one wave, which should, be the range between this wave here and this wave here, which is once again your free wave and your one wave, and the distance between these two over here would be, zoom out, your free wave right here rather, all the way back down to your one wave. So in both market cycles, we bottomed at a very, very close valuation to the free wave. In the first market cycle, we capitulated below the free wave, and we bottomed very, very close to the free wave. We didn't even make it down to the four wave. We made it absolutely nowhere near the one wave. So what we can say from the first market structure is we held both the one wave and we held the four wave, and we were close to the free wave. Let's look at what we did in the second market structure. So the second market structure, after we had our ABC correction, we not only held the free wave, once again, we held the four wave. What should we expect if we are coming over into this market cycle? Because you can see we've got our one wave, 2, 3, 4, and 5. Unfortunately, we have deviated from the previous trends, because this was your four wave correction right here. This is where you had your four wave coming down to 28,200, and in previous cycles, this was the range that we always held. But at this moment in time, we are moving below it, and it's interesting to see that we are moving below it, even accounting for diminished returns. Diminished returns doesn't necessarily affect the market structure of Elliott waves. You know, diminished returns would simply mean that if you've got, you know, a massive cycle, and then obviously, you know, this is your first bull run, you have an A, B, C correction between the 3 wave and the 1 wave. It would simply mean that, you know, it doesn't mean that the market structure is going to change at all. It simply means that, you know, the next rally is probably just not going to be as euphoric as the first one. And then if you do have, you know, your A, B, C correction, you should once again bottom at the approximate value between the 3 wave and the 1 wave. But this is what we've once again deviated from, and at this moment in time, you can see the 1 wave is really the only thing that we have holding the market structure up at this moment in time, because, you know, you can see 1 wave, 2 wave, of course, but I think it's completely degenerative to even assume that we would be heading down to $4,000. You know, if you're Peter Schiff, then fair enough, but if you're anyone else, it's yeah, I mean, anyway, Peter Schiff is a degen for thinking that anyway, but nonetheless, the 1 wave is really all we've got at this moment in time, because 1, 2, your 3 wave was obviously all the way up here at 64,000. I don't need to tell you that that's not going to hold. The 4 wave, which was the correctory phase down here, was around 27,000. Very interesting. And once again, we did not hold that market structure. So the only thing we have to hold the market up at this moment in time is the 1 wave down here. And once again, I have to very much emphasize that I do not think we would be coming all the way down to the 1 wave. Once again, I've been saying that in Elliott wave theory, you typically bottom between the range of the 3 wave and the 1 wave, and typically it's closer to the 3 wave, or, you know, at least in Bitcoin rather, because if we do look at the cheat sheet, or, you know, you can go back to the cheat sheet before, in the cheat sheet we come down to the 1 wave. In Bitcoin's previous bull cycles, we've always bottomed at / around the 3 wave. So very interesting to note. Once again, the next leg down for us at this moment in time would be approximately another 49% move. So that is Elliott wave theory. That is what the market structure is looking like. This is what, according to Elliott wave theory, is likely to happen based on previous trends. Now, once again, I do not think that we're going to be coming down to the 1 wave. I do think, if anything, once again, this has nothing to do with Elliott wave theory, but I think the most likely scenario is for us to either bottom at the 200-week moving average, which I will quickly display to you. But if you, once again, if you do want my full in-depth thoughts of, you know, kind of why I think Bitcoin's coming down to this level, you can check out my previous Bitcoin videos in the past couple of days. But nonetheless, the 3 wave, if this does converge up, because I imagine we're not just going to drop like a rock down to this next week. So let's assume that this converges to the upside for the next couple of weeks. You know, this could come down to approximately 23,000. That is my minimum price target at this moment in time for Bitcoin. And I do also think it's possible we could come down to 19,690. Which was the previous all-time high. We could even quickly capitulate to 19k before bouncing back out of here. I do not think we're going down to 14,000. And once again, this is not even really what Elliott wave theory is predicting. Elliott wave theory, once again, predicts that if you are going to have your correctory bottom, it should be between the 1 wave and the 3 wave, which is between these ranges over here. Obviously, because we've come down to this phase, this is where we should expect the bottom on the Elliott wave theory. Once again, I just wanted to give you an update on the Elliott wave theory. I personally do not think we're going to be coming down to these levels, but yeah, that's all I've got for you today. Hope you found some value in today's video. As always, not financial advice. Cowboy out. Peace.